So let me clear up a few things here. In my last chart of the day, um, all I was trying to point out was that the miners don't always lead the price of gold. A few people have suggested that's the case. That if the miners diverge, that automatically means that they are leading gold, and that gold will either turn higher or turn down, and it's just not the case. There are many instances where the mining stocks diverge from the price of gold. So just because the last couple of days the miners have continued down while gold has continued up, that doesn't necessarily mean that gold is ready to top and roll over. It, 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 it could mean that, but it could also just be that the mining stocks had an especially powerful rally out of this first daily cycle, got stretched a little bit further above the 50-day moving average than gold and silver, and they just needed to correct more. Could mean that the banks are trying to extend this daily cycle low a little bit further, trigger a few more people stops, and scoop up more shares before another leg up. Uh, so at the moment, this just looks like a daily cycle low to me. I've noted before that pretty much all daily cycle lows will at least turn the 10-day moving average down. It did it marginally here at this daily cycle low during the baby bull, and both of these other daily cycle lows. Of course, it did it during the declining phase of the intermediate cycle. And when we got this little 2-day dip here, and a lot of people were calling this a daily cycle low, I disagreed because it was not strong enough or long enough to turn the 10-day moving average down. So I said at the time that the daily cycle low has to still be ahead of us. And so now we've got a correction that is deep enough and long enough that it has turned the 10-day moving average down. So I can say with pretty much 100% conviction that we are, that this is a daily cycle low. The question is whether or not, it has bottomed or if it has further to go. It looks to me like it probably has further to go. I've gone over this many times in the past. This is one of the tricks that the big money, the banks use, is they will try to run stops. That gets a lot of people to sell their positions and allows the banks to scoop up a lot of shares without running the price against themselves. So we've got a classic setup that like that could happen here. We've got a reversal candle on this day. A lot of people assumed that this was a bottom. They buy, and then the price doesn't, it isn't allowed to follow through, which is exactly what we've seen happen. These 2 days where gold has rallied big, but the price on the miners has been capped and suppressed and turned back down. So anybody that bought on this day is at risk of having their stops run if they can push the price below Wednesday's intraday low. If they can do that, then everybody that bought this reversal candle is going to get stopped out, and that's going to free up a lot of shares to come to the market. At a lower price, and that may be all that's happening. It's just the banks are just trying to run those stops below Wednesday's low so that they can scoop up more shares ahead of the next rally. And I'm going to say there is going to be a rally. Now at this point, I can't say for certain that we're going to make a higher high. I'm pretty much convinced that's the case because I expect gold to go over $1,300 and I expect silver over $20. And I really doubt that the miners will be able to be suppressed while the metals continue higher. So I think we are on day whatever this is, 42 or 3 of this daily cycle, and we're gonna put in a cycle bottom here, and we're gonna rally. Now, where I have seen uh, divergences that are somewhat significant, often is when you get a correction like this, and then let's say gold. Let's say we get a bottom here in the mining stocks, and then they rally out of this daily cycle low, which I'm about 99% will happen. I just don't know if the bottom was here on Wednesday or whether they're going to break that, uh, run that bottom and run those stops, and we get a little bit lower low. But I'm sure we're going to have a bounce out of this daily cycle low. Now, what I want to see is whether or not, let's say, as gold moves up to 1270, 1280, if the miners don't get in gear and eclipse this high, then I think we've got a divergence that you need to pay attention to. That would be a warning that gold is probably about to complete an intermediate cycle top. So I'm not terribly concerned about these 2 down days. I think it's probably just the banks suppressing the price, and they're going to try and run this low here on Wednesday and trigger everybody's stop. And then I think at some point next week we're going to get a bounce. The important thing is to see how that bounce unfolds. If the miners don't get in gear quickly and break above these highs, then that could be a warning that gold is nearing an intermediate top. But I like I said, I wouldn't expect that to happen until gold gets above 1300. I think that is the the major resistance zone that we need to watch. You can see here gold is already gone through this resistance zone here at 1200. It's in the process of going through this resistance zone here at about 1240 to 1250. The next real major resistance zone that might stop this intermediate rally is the 2015 high at just a little over $1,300. So you can see that turned down this bear market rally. It stopped this first intermediate rally in what I think is a bull market. Stopped that rally, that intermediate rally, halted it again briefly, and then it halted it more or less uh, during the election night reversal, uh, as gold was moving up out of this cycle bottom here. Then we get the reversal, and gold closes back below that $1,300 level the next day after the election. So I think that is the major resistance zone that we need to watch, is that $1,300 level. And I expect gold is going to get there. And so what I want to see is if the miners uh, start to struggle out of wherever this daily cycle low occurs. I'm going to guess it's probably going to come Monday or Tuesday, since we get the State of the Union, and the stock market just keeps being propped up into that State of the Union address, just like I warned was going to happen. So I would say we're probably going to get our daily cycle low in the miners here sometime maybe early next week. And then what we need to see is how that rally out of the daily cycle low unfolds. If gold gets up to that $1,300 level, and the miners are not able to quickly recover this February high and make new highs, then at that point I think we need to become concerned, and you probably should just get out of your positions and then sit on the sidelines until the summer ICL forms. And that's probably going to come. Well, it came in May last year, so you would expect it sometime in that same timing band May, June of this year. So uh, that's going to be the strategy for next week is we should get a daily cycle low here in the minors sometime next week, and we want to see how that rally unfolds out of that cycle low and whether or not the miners quickly start to catch up to the price of gold and silver.